Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
Hey legends, and welcome to day 2 of Trading Congress 2025, a full week of focused education, market insights and practical guidance designed to help you become a stronger and more confident trader. This year, Trading Congress is supported by our wonderful partners, EdgeX and Weeks, who made this entire edition free for everyone. So please do say a very big thank you to them for that. All key links can be found in the description below if you're viewing this on YouTube, or it can be found over at the Burb Nest Twitter. Now, without further ado, we've got a super exciting session. We're both a little bit of talkers, but we have got a lot of value to get through. So without further ado, I would love to introduce you to Robin Saunders. Robin, have we got you there? There we are. Senior institutional over at KuCoin. Going to teach us a little bit about quant trading. But first, let's hear a little bit about you, my friend. Let's tell the viewers a little bit about your background.
Yeah, so hi legends, hello, how's it going? My name is Robin, and I've been in crypto for a long time. I learned about Bitcoin back in 2009. There was this little website, degen website called 4chan, and I was a teenager, and somebody posted about this thing called digital gold Bitcoin. It was 25 cents, and I live in Canada, so I couldn't particularly buy, just the way, nobody locally knew about it or anything. So my first investment then was actually in Dogecoin in 2013. I put 1 month's rent in. 2 weeks later, I took my 1 month's rent back out, and I built everything from that initial investment back then. So that's kind of my intro into the scene. So yeah.
Love it. Great intro, short, sweet, allows us to dig deep into the rest of it as well, because whenever we bring guests on, we always have a little bit of a conversation about agendas and stuff. And I have to say, the suggestions from Robin were so good that we've actually kept a lot of these headers. So I'd love to claim, some rights to some of these headlines, but they just really made me smile. So the first thing, looking at the 2013, 2015 period of your life, very, very early at that stage to crypto, like you said, you had all of that lovely upside the lovely upside that you see with hindsight, but at the time you were just in a super, super risky emerging space, right? So what was it like kind of digging in the trenches in those days?
I tongue-in-cheek say that when I meet meme coin traders today, they're like, we fight in the trenches, and I'm like, that's great, I dug those trenches. Like my first investment was the first meme coin, Dogecoin, it was really interesting because back then, Twitter was a thing, but it wasn't like what it is today. Nothing was what it was like today. And most of the meme coins or even just any projects you found was on forums. Like Bitcoin Talk was a big one. And you'd have some guy who'd come on and he'd post, be like, hey, I'm starting this thing. The one I always go to because it burned me 4 times over was called Red Panda. And he's like, oh, like, so the first one I saw and I was like, oh, okay, whatever. And then it did like, I don't know, 100x or something. And I'm like, okay. So I just like, so the next one, I see it come back because there's some issues and I'm like, cool, let's go. Or the same. Yeah. And it rugged within like, 3 hours. And I remember putting in like $200 and I'm like, oh no. And then it came, I'm like, okay, well, it's not going to happen again. And it's not going to happen again. And, so that was like over like 2 weeks, and I was just so foolish diving in and there's like, you see the gains coming and you're like, okay, cool. Like, yeah, like here we go. And you start to do the math on, how much you can get out and, it starts playing with your emotions and then it, all of a sudden, but the process to list back then was totally different. Like today we have, Pump.fun and you can do a lot of things on chain, but back then you'd actually have to pay to get listed on some crappy exchange somewhere. So there's also the risks of, these off-brand exchanges, which was like everything. And then the fourth time was when I decided not to go in. I said, okay, I'm done. That's it. This thing is like, big scam, whatever. And then it did another 100x and I was like, so salty. But yeah, so a lot of the process was back then was really like calculating how much you're willing to burn and how many times you're willing to burn. I learned that was when I really learned that lesson. And preserving your capital was big. So every time that I got burned, it was like, crap, now I've lost this much of my Dogecoin and then this much and then this much and this much. And back then there wasn't any USDT or stable pairs. Everything was against Bitcoin, Litecoin, and Dogecoin. So you were trading right against your bag. And yeah, so, and I did that for 2 years. It was a lot of sentiment analysis and trying to follow where things are going, and Reddit started to pick up and Twitter and yeah, but it was definitely a whirlwind, that's for sure.
I think it's one of those things as well. I think everybody you speak to in crypto, and I kind of came more from a traditional market background into crypto. I kind of saw this. It was trading, it was finance, weirdly, that kind of caught my attention a lot later in life, not until my late 20s, right? I'd already built careers elsewhere and businesses. So when I came into it, I was very technically focused. I was using a lot of kind of macro approach and stuff like that. But one of the things that I did poorly in the early stages was I was a terrible investor in crypto. I traded it quite well because it was a super volatile asset, which really suited me. But I really couldn't get myself in the mindset of this. Just hold this for a few months and this thing could do 100x. It was getting to like 3-5x and stuff. And I was like, look, it's a big return, right, for what I'm used to doing this intraday. So do you think that helps set you up? Because a lot of people say when you're in crypto, right, you have to go through, it's your baptism of just getting rugged, burning out. And basically it's this kind of adage that we just keep wiping you out until you basically either stay here or you're just completely out of this. But you mentioned things like sentiment analysis. You mentioned things like really looking at that. Before that was really, we have all of these platforms now, Fear and Greed Index. You can check sentiment the same way you can use VIX on traditional markets. But in those days, you were literally, right, like trawling Reddit sites and diving in. There weren't even really Discord communities, right? This was all very embryonic.
Yeah, it was actually like, I didn't even know what sentiment analysis was. It wasn't like, like none of these terms existed in my life. I definitely, I had no mentorship. I wish I had mentorship. Like I had nothing. I had no friends in the scene. I was completely alone online, lurking like a true degen. But it's so true. Like what I've learned, there's two things that I've one I learned from like way back, and one I've learned more recently. The first one is I used to say to everybody, and I still say this today: if you can't handle a minus 90% drawdown, then you don't deserve plus 90,000% gains. And I really do think like that's like the perfect way to describe what crypto is. Even today, like volatility has gone way down, and if you're trading like the top 200 or 500 coins, but yeah, like it's even just recently, you know, we have Bitcoin pulling back 30%, and in all of
Mhm.
my feeds with the, you know, my more professional contacts, they're all freaking out. And
Yeah,
I'm
it's
like, but this
over.
is what you signed up for.
Mhm.
And then the other one is that every single person's journey into crypto, in like as an introduction into the scene, is unique.
Mhm.
And there's so many, like there's a lot of, you know, I've now met a lot of TradFi guys, but I've also met a lot of people like myself where, you know, oh, I like one person's like, oh, my dad was talking about it because he saw it on the news, and then, you know, I got into it and I lost, you know, whatever. And then I've met other people who they got into it for work, and they said, oh, you know, I was a graphic designer. I did some
Mhm.
designs for early meme coins. I only got paid in tokens, and that's how I built my bag. I became a millionaire. I lost everything. I became a millionaire again. I lost everything, and then I became a millionaire again. Then my parents stepped in, and they were like, "Okay, let's like put somebody aside." So there's all different walks, and like yes, there is a factor of trial by fire, but I nowadays, with the way the markets are, you really can't avoid that. The definition of what the fire is, though, comes down to you. It doesn't
Mhm.
come down to what people tell you. It's what you know. Does -30% to your report
Mhm.
really make you cry? Then
Mhm.
that's your fire. You
Mhm.
know, if is burning everything, like is losing everything is your fire, then that's your fire. But
Mhm.
it really is quite subjective, I think. Yeah.
I think also learning how, and this will really kind of segues into the next point, but learning how to quantify that is something else as well. So, you know, a big part of my journey was kind of saying, actually, do you know what? There's much more of a casino side of the early stage investments for me anyway, because I really didn't have the fundamental knowledge or the technological knowledge of crypto. Really, I was going on hype, sentiment, like you say, trying to look at communities, how active are they? A lot of people talking about this. You know, this was before really you had any, and this is another term we're going to really dive into, right? But institutional, commercial adoption of these tokens, and also you didn't have this wildly oversaturated marketplace that you have now, right? So you know the access, the barriers to entry are a lot less now than they used to be. Like you're talking about things like pump fund, and that can with it brings a lot of danger, right? So I love the kind of digging the trenches part. I absolutely love that statement about people that say that they're in the trenches now. You're like, well, you're welcome. You know, I dug those for you right back in the day. So what about the next phase? Say 2017, 2021, sorry, no, 2015, 17, looking at the explosion being part of that, absolutely, you know, that giga ride to the upside. You know, were you prepared for that? Would your methodology changed? Is it still the same methodology you apply today?
So I witnessed the run in 2013, and I was sidelined the whole time.
Yeah.
So I experienced that, but not firsthand.
Mhm.
And for me, it was like just a matter of when, not if,
Mhm.
with like the next bull run. And you know, like I don't even know, like if, yeah, like the next run up.
Mhm.
And so when it was actually happening, I'm like, okay, here we go. Like here we go. This is my time to shine, you know. And
Mhm.
I ended up round tripping a lot of it. But you know, there's no shame in that. If
Mhm.
somebody shames you for round tripping, by the way,
Mhm.
they're not your friend. Get them out of your life.
We're not. This was
Um,
jealousy, right? No.
yeah, yeah. But what I really like, I'm this segment actually, like this time period, I think is very relevant to today because I've been saying this a lot. If you've met me in person, you'll hear me say this, but I really think that we're actually right now in a very similar position as we were between, like, I think right now we're probably early 2017 in terms of like the
Mhm.
way I'm feeling the markets acting.
Mm.
I mean, back in past like 2015 or so, some institutional players were kind of getting in, and
Mhm.
the ramps were there, but it wasn't as easy as it is today. Wales also existed by this point now, so
Mhm.
you had some big retail players that had their own private teams, you know, so there was like these pseudo institutions.
Mhm.
So but what I'm seeing now is very similar, because on this run up, you know, like going from the bottom of the bear where you're just kind of like, okay, I give up, you know, great, like my, you know, whatever, to running up to 17K.
Mhm.
Every red candle, every red weekly candle, every two red weekly candles on the run up was like, this is it. You know, oh my God,
It's
it's all
over.
over.
Yeah.
Every like Bitcoin's dead, and you have so much FUD come out. You have,
Yeah.
and it was like some of it I think was manufactured in hindsight, but I think a lot of it was genuine, of people just like, you know, maybe they were short, but like I think
Mhm.
a lot of it was people just freaking out, going, "Oh
Mhm.
my gosh, we had a 30% pullback, we had a 20%,
Mhm.
40%, 50% pullback." It was like, "Oh no, like this is it, it's all
Mhm.
over." And then 2 weeks later, we're back up and past where we were, and
Mhm.
then it would happen again, and then it happens again, and then and so I like now what I'm seeing, and this is just my own theory now, is like, you
Mhm.
know, these days, we're having a lot of new players come in, and they've never experienced this before.
Mhm.
They experienced 21, and yeah. So when I like look at this time period, it is, for me, it's not even like technicals, because like all technicals blew up. The only thing that really worked for you is maybe like some momentum,
Mhm.
trend following,
Yeah.
like if you wanted to really like kill it back then, you just turn
Mhm.
on super trend, set it on
Yeah.
a big
Yeah.
time scale, and then just go hands off, right?
Mhm.
As an indicator. You would get blown up on what it would actually tell you to exit, but like
Mhm.
technically, it would work. And so when you're looking, so really it was actually about watching the sentiment. Really, it was, like you said, these tools didn't exist. So it was
Mhm.
diving in, trying to get a vibe on how people were feeling. And at the time, when you would see people like in their absolute most vulnerable state was the bottom.
Mhm.
But as like the outside, you're going, oh crap. So then you're like, okay, this is it. Like everybody's saying this is it, we're gonna go. And that was probably the most difficult thing about trading these in this time, was not having that understanding, but also like you have no real technical, for me personally, I had no technical thing to back me up. I had
Mhm.
nothing quantified or anything. So then you punch out, you make a bag, of
Mhm.
course, because
Mhm.
you're still higher than when you got in. So
Yeah.
you
Yeah.
punch out like your trading bag, but then everything starts to revert, and then you see what's going on, the sentiment switches, and you're like, oh crap. So then we dive back in. But you are like late to the scene when it actually comes to, where at the
Catching
entries and
out
the
as well,
exits.
right?
Yeah.
I think that's the big thing, right? I think people. I was a little bit the opposite, right? I lacked the conviction, but I had the technicals because I bought them from traditional markets, right? So for me, I was kind of seeing these levels and thinking, look, you got to be taking profits at these levels, right? That's just how the game works. And crypto just, I don't know whether it didn't understand the game, it was writing its own script, right? But these levels were coming up, and I was just like, that's a brilliant catch. I mean, I've Pico taken that top in there, and then it would just go like it wasn't even there, right? And then I was like, oh, okay. So now I need to look at it. And then, like I said, I wasn't the greatest early stage investor. I didn't have that conviction because I don't think I understood the tech. It's only when actually I started to realize this is about community, this is about interest, this is kind of, for me, it was almost this rebellion against, traditional finance, right? It was these people getting in the game that were like, you know what, I'm not going to make money. I don't earn enough to make money in an ISA, right? I don't make money in this institution. But what I can do is I can just buy this token I know nothing about because I'm seeing all these crazy people on the internet make millions off of it. And look, not saying that was, the route. It's always, with hindsight, easy to look back and say, oh God, yeah, well, why don't you just buy Bitcoin and hold it? Yeah, sure. When it's like doing this,
Good luck.
right?
Good
Yeah.
luck.
And you talk about percentages, right? We're not even talking about leverage. Someone's invested a few thousand or a few hundred, seen that massive rise with leverage, and you're tens of thousands, sometimes hundreds of thousands up on these tokens. Well, then a 30% drawdown does hit you hard because you feel like you've left 30 grand on the table. Or you're not thinking about it in percentages and processes, which you should do.
Yeah.
You're thinking of it purely in outcomes. So, okay, so the euphoria of that, digging those trenches in 2013, 2015, getting to experience that mad upside and all the lessons that teaches you, right? Like you said about, holding, about maybe needing some technicals, maybe working on when it is you want to be best to kind of get out. Well, then, we had an interesting conversation, which we'll go on to, about building in bear markets, right? And really kind of doubling down on your education. So what did 2017 to 2021, your headline, which I love, it's dead, it's all over, and in brackets again. Because how many times do you hear that in crypto? So what was that really powerful? Because your rise from then into being, senior institutional at KuCoin, the wonderful work you're doing with quantitative trading, there's quite a big leap there, right? Was that a really, really interesting and important point in your career?
Yeah, so the top of 2017 was like, everybody's coming to me all of a sudden asking for help and this and that. It was like totally, truly euphoric. You think you're invincible. You think your bags are great.
Mhm.
Like, you're looking at them as like your savings, and you're like, great, like I'm safe now. A lot of things just dissolve away when
Mhm.
you let your emotions take over, which I definitely did. Yeah, like the other part of all that too is I had a lot stolen from me in various ways.
Mhm.
So I would make a bag, and then somewhere like an exchange would like an FTX would happen, and I'd lose like, big
Mhm.
chunk. And that happened over and over again throughout the process.
Mhm.
But then yeah, so then everything starts to come back down to reality. The bear sets in, volatility goes away, everybody says it's all over, the doom and gloom. And I then stepped away, and I started working on so this whole time I was actually running my own startup and
Mhm.
my own business with my wife, my now wife. And so when everything kind of phased away and I saw like, okay, like there's not really much happening, and then all like the after like the knockoffs of like minus 70%, like getting down to that, like the whole time you're being cut and your confidence goes away. So you're having what some of my friends are experiencing right now, where they're like, okay, 10-10 wiped me out, this is
Mhm.
it, like I'm not getting back into this, it's just too painful. So I was feeling like, I still had my holdings, but
Mhm.
I was feeling all these types of emotions. So I ended up just building and focusing in on my other business.
Mhm.
And I think that's like a big lesson that I took away, just in every bear market, is like when you're feeling okay, I want to wait. This is it, right? It's over. Or like if you're committed to trading, or you love trading, or you love investing,
Mhm.
and you're like, okay, I want to wait until this. Like right now, there's like big sentiment of like, oh, the rotation is happening, and like the alt markets is gonna kick off, and like I'll just
Mhm.
chill. Well, then what are you doing? Especially if you're a full-time trader,
Mhm.
the easy choice is to watch TV, play video games, smoke weed,
Mhm.
just chill, vibe,
Disconnect completely.
just
Yeah.
just take it easy, whatever. I'll just let my stuff sit in stables, or
Mhm.
maybe I'll put in some yield thing. Or no, like you should be educating yourself.
Yep.
And like I ended up doing something outside of crypto, but I still built, and I still
Mhm.
took the time to build it. And after 2021, which we'll get into later, it was the same thing. Everything starts to go down. So what did I do? I really started to dive into more into the quantitative stuff, and that
Mhm.
I didn't know, or I started learning more about TradFi and how TradFi works, or how
Mhm.
funds are structured, or how institutions are structured, or how they operate,
Mhm.
and scaling up my coding. Like I've worked on a
Mhm.
bunch of coding projects, everything from like pulling down data analytics from exchanges to building out my own, pretty much revamping our software, building
Mhm.
out new algorithms, and like this is all stuff that maybe it doesn't work today and maybe it doesn't work tomorrow. But the point is that you're building up this new skill set that in the future you will be ready. Instead of
Yep.
what happens all the time is, from between 2013 to 2017, if you didn't, like, I wasn't ready at all.
Mhm.
And then going to 2021, all of a sudden I had all this stuff that I had from the past that I was able to lean on to start
Mhm.
to start my prop fund. So, and then now, during this, I mean, now I'm working for KuCoin, but I feel way, way, way more prepared.
Mhm.
And it's just, like these are the markets are giving you a chance
Yeah.
to breathe, which means you can learn and you can grow. It's like giving you an academic period where you can
Mhm.
go study for free,
Mhm.
really, if you think about it, without any opportunity cost being lost with the bulls,
Mhm.
the bull markets.
But
Yeah.
then you've got to manage yourself, right? I think so. One of the things that I always say this to people, anybody that we work with, anybody that we mentor, and especially anybody that's in my stable with this, that there's two very different sides to you. And somebody that's been a full-time trader now for kind of 6-7 years, the side of me that has to deliver, right? The person that brings the money in, the person that brings at least some stability to what is a very, very fluctuating market. But then there's also the student. All right. So it's compartmentalizing when is my time better spent on me versus
Exactly.
in the market. And actually it amazes me how people get this the wrong way around, how people kind of come late to maybe, a bull market or those kind of major uptrends, or, those big explosions that you have. And they're trying desperately to do all they can. And they typically get a little bit hurt in that scenario. Then the bear market comes in, or the less favorable conditions, and they spend that whole time trying to fight it with, not really a lot of knowledge, not necessarily a lot of technical understanding, and then are ill prepared for when the conditions come in, right? And I think we talked about this briefly before the show as well, and going to get caught on a misquote here. I think it's Mike Tyson, but it's train hard and fight easy, right? Meaning that when you've got the opportunity and the market conditions aren't there, the amount of people that sit and just torture themselves looking at just this nothing chop, like when the bear market, the volatility dies out, or you can tell when the sentiment's not there. So I think sometimes if you look at the journey you've gone through from 2013 to 2021, to come out that side of it and really realize what you needed to work on, the gaps you needed to fill in your knowledge. What I love about things like this, about Congress, about having guests on like you, is that this will resonate with somebody that could save them literally 9 years of their life or their career, right? Just by kind of saying, do you know what? Actually, that sounds like me, right? I'm the guy that goes out there and I don't do this one, I don't do that. And do you know what? this is what I'm going to kind of double down on. So, I mean, this segues beautifully into kind of your quantitative trading career and institutional trading. I know we really want to talk about that because, again, we had a brilliant little back and forth on that before the show and what it means to be an institutional trader. You know, some people think it's to do with sums of money. Other people see it as this almost cartoon villain that sat there waiting to take your stop losses and that, right? So, you know, from your side of things, tell us a little bit about quantitative trading, your quantitative trade, because most people sit here thinking, I don't have a degree from Oxford or MIT or something. There's no way I can do quant stuff and that. But, you know, you took a very different route into this.
Yeah, so formally, my academic background is I did 2 years in marketing. That was it. And so I don't have, any crazy degrees or anything. And that's the beauty about crypto. I've now talked to some TradFi people that have come in and they're like, oh, here's, I did a bank and this and this and this. And I'm like, that's great. I was an artist for 10 years. And they're like, and then you moved it. So I ended up, pretty much what happened. And I think a lot of people will relate with this, but GameStop happened. GameStop went bang, and the community in GameStop, the way that they talked about the markets, because then you had the hive mind, and they all started drilling into well, why is the naked short interest so high, and this and that, and they started getting to the plumbing of how the traditional markets actually worked, and just having that mindset, just I don't know, turned something on in my brain, and then I started then looking at crypto again because obviously I'm a crypto native, and all I did was just look. That's all I did. I just looked at the tape. I just looked at the books. I just looked at, one exchange to another. And I'm going, there is so much opportunity here. The problem is I don't know how to code, but there's so much here. And I bet you if we write up some software, we could probably capture this and we could probably make some good money. So I went to a friend and I said, hey, you teach me how to program. He was a very talented programmer. I said, you teach me how to program. You help me build this software. I'll fund it. I'll manage it. I'll deal with it. But I need your help. We split everything 50-50. And he goes, sure. It's COVID. We have nothing going on.
Good timing.
So great timing. So he ended up teaching me everything I know about programming, and we built some really simple high frequency trading style software. And that was it. We turned it on DOT as our first tests, and our goals was, okay, we're gonna go in with $300 as starting capital, because it's if it works, it works. If it doesn't work, it doesn't work. And which is great. That's the nice thing about quantitative trading and algo trading. You'll know very quickly if it's going to work or not. And once you know it's working, it's consistent. So, well, until it's not technically, but so I turned it on DOT, and within an hour we made $1,000 using $100, and we're going, holy crap, we have something here.
Sell the house, get something on there quick.
We were like, whoa. So so we did that whole journey was wild. But a lot of it that was just straight every day, 18-hour days, nonstop, building, coding, refining. Anything that we were doing repetitively, we would automate it. And we had trading bots, a whole network of trading bots all over the place, executing trades based off of just some really simple concepts. And then we found some mechanical edges that were very profitable. But that all just came back down to looking. And actually just look not just looking at candles, but looking actually at the trades that are being executed and the
constructive looking, right? So I think that's the important thing, not just blindly watching charts thinking this is going up, looking at a key move on a chart, understanding why players that were involved in that move had particularly profited from it, and then finding or trying
even more simple than that. More simple than that. It with HFT, it at the time things were so inefficient. It's harder now. You can still do it in DeFi though. There's lots of people who DeFi, even DeFi
arb trading as well. Arb trading.
But it was even more simple than that. It was the price moved here, it didn't move here. Let's go. And that is an edge. So today, and especially with so when you're trading with TA, right, you're drawing lines, you're looking at say Bollinger Bands, or you're looking at EMAs. That's all in the category of discretionary trading when you are the one pressing the button. You were making the discretion on pressing the button.
Mhm.
But in this, it was like mechanical edge, and that was edge. When you're
Especially
discretionary
now,
trading,
right?
yeah. But now, like if you're discretionary trading, you are the edge. Like this in your mind is the edge. And that's where like my whole realization pivoted, because I used to do that and I thought I was a really, really smart guy because, you know, yeah, great. But then it all pivots into you know, the quantitative side. And actually, like when you make the distinction of, if I'm forced to take every single trade that I think I need to take,
Yeah.
then you're actually going to know exactly what your edge is. And when you, like, even if you write an algo and you make, and you have your own strategy, let's say you have a strategy, like a breakout strategy, right? You draw 2 trend lines. Every time that there's a down wedge and it pops out the top, you're going to take that long, right? The moment that you go, I don't know, it doesn't really look right, or the volume, you know, and you add in some extra thing, the whole strategy is just you draw a bottom line off the wicks and you draw a top line off the wicks. And the moment that you alter that, you've now messed up everything. But how are you even supposed to know that you messed up everything? Like, do you even back test? Like, do you have any
People
idea
don't,
of
right?
like
People don't.
a lot of people don't, or they don't take the time. You know, and the thing is, you need to have like at least 200 examples where you take every single one with the exact same setup. And then at the end, you can actually have you can actually see what your expected value is out of that setup.
And that gives you confidence as well, right? Because I think a lot of traders will come in. So 2 things really quickly, because it really resonates with me. One, everybody should read The Way of the Turtle. I don't know if you've ever read it, but
I've heard of this. Yeah,
it's incredible. Basically about professional traders recruit a load of random people from backgrounds, give them a completely profitable, proven system that's been crushed in the stock market. All they have to do is follow 7 steps.
ABC. Yeah,
exactly. And basically one person crushes it. The rest of the people just are variances of massive crash and burn. And again, the grey matter getting in the way, right? People thinking, actually, like you said, oh, our volume's a bit high on this one, though. Maybe I'll step out. Or actually, I think gold's going down at the moment, so maybe it's not too good to be in defensive stocks, right? Versus, I'm going to execute this every single time. And the only real way you do that is removing the discretionary side, right? And making it really mechanical. But don't you find that when you have that understanding as well, if you're back testing, for example, a system that takes every trade, that when you know you've got, say, 65% win rate, average R to R of, say, like 2.5 to 1, then all of a sudden you're kind of like, well, when that trade comes up on your screen and you are doing it discretionary, then you've also got that confidence that you know this works historically. So you've lost that 3rd trade in a row, but you know it's baked into the data. Right?
Yeah.
So it doesn't just have to help you build quant systems. It can really, really help you backtest and actually, you know, reinforce your edge, if you like, with a manual system.
That's the whole reason why you do it. The problem, like I said, is when people are like, okay, you know, maybe I won't take this one or whatever, and then you're changing all your statistics. So if you're doing this properly, then you should be able to calculate stuff like your Sharpe ratio or your Sortino, which is like, you know, a comparison of like your risk, overall risk performance of your portfolio,
or, you know,
or
risk-adjusted returns as well, like Sharpe.
Yeah, like, you know, there's like these sexy words, but like the point is that all of this is done so then you know exactly what your expected value is at the end of this. And that's where it comes into the algo and the quant side. Because if you have a way to quantitatively build out a rigid set of rules, then you can remove yourself out of the equation. And that comes from a lot of research, from either just looking at like things like statistical arbitrage and mean reversion, all the way down to, okay, I know that this TA setup I think works. Well, let's actually like turn into you know, finding a way to quantify that and then turning that into an algorithm, and then you can let the algorithm do the back test. And that also then removes you as a discretionary on the back test. So there's a lot of these but just like what you're saying with the confidence, if you know that 3 out of 5 times that trade's going to win, and you know that you know, and let's say your X is at the top of the wedge, so you know that, you know, you use, let's say, no leverage, but you know that your risk to reward is, say, 2 to 1. Great, you have a profitable strategy. Hit it every single time and don't care. Because why? Because you know that the next trades are going to work. So why do you care about if this one doesn't work?
And it flips a little bit, because it makes you care more about making sure you don't not take the trades. Nice double negative for you there, because actually what you're then saying is, Christ, this is baked into my data. So while I might not think this one works, if I don't take this trade and it does work, all of a sudden my data set's completely skewed. And then, you know, you're stepping in, and the confidence kind of then breeds execution, which then kind of takes it methodically. But to just go back to this, I think one of the things that intimidates a lot of people is, in terms of back testing, in terms of understanding this, is, you know, and especially back in the day, there was a huge barrier to entry. If you didn't know code, or you didn't know somebody that could code, it was very, very difficult to back test these systems. Now we have, you know, strategy testers, for example, in TradingView, you know, like TradingView, you know, wonderful trading platform. I think almost everybody uses it, right? But, you know, it's not a perfect back testing system for a few different reasons.
Not at all.
Candles that people come to me and they're just like, man, I just put 3 moving averages on a chart and this on Bitcoin, and if I just take 2 trades a year, I'm a millionaire in like 5 years. It's like, yeah, but you're taking that data set from when Bitcoin was basically an emerging market play, and now you're talking about quite an established institutional asset, right? So, you know, there's always differences. But what advice would you give people? I know there'll be a lot of people watching this here going, guys, I would love to do that. I'd love to back test, but I don't know Python, I don't know C, I don't know code. You know, how would you look at that? Now, would you take the time that you did to really kind of, because COVID was massive for me as well. I basically joined TBN in COVID and decided I really wanted to start building myself a brand, build out the education side of what I did and my journey. And that gave me a huge advantage to do that. So I was furloughed from my own company that I ran at the time, which funny enough was a digital marketing firm and a procurement firm in London. And it just gave me this great window of opportunity. And I said, you know what, if I'm doing 12, 14 hours every day in the office, I'm just going to do that for studying. And I'm going to really take this to the next level. And that was really, really helpful. If I'd done that with code, I have no doubt that I could have achieved at least something with programming, right? But a lot of people be sitting here thinking, you know, I've got, you know, 5-7 years to get up to a level of a decent programmer that, you know, that you can do. But what was your journey like in that respect?
Yeah, so this is what I would say, right? If I came to you and I said, yo, I need like $10,000, I want to go trade. And you're like, okay, great. What are you going to do? And I'm like, I don't know. I just have like, you know, good vibes and this and that. And you're going to say, no, I'm not going to ever give you that money. Like, you know, that's a joke. But then you'll turn around as a trader and you're going to be like, oh man, I'm going to go trade, you know, crypto or meme coins or whatever, right? I'm going to get into like on chain and I'm going to, you know, like pumped up fund, blah, blah, blah. You're doing the exact same thing. So if you like if you're going to start, if you're going to be using like, say, a couple $100 and you make, you know, 50, 60K a year with a salary, great, go for it. Like, you want to go gamble, that's gambling, because you have no idea what you're actually going to be doing. But if you actually want to be serious about it, then I would say stop trading. If you're not seeing any consistency, stop trading. Just don't, because you're just going to lose. You're going to lose to people that are just smarter than you. And what you're saying is that you think that you're smarter when you trade. There's two sides. Either you think you're smarter than the market and you're going to kill it, or you accept that the market's going to do what the market wants and you're just trying to, you know, take out a small inefficiency somewhere. So if you're not, you know, if you don't actually know what your inefficiency somewhere is, because you are not smarter than the market, that's been proven time and time again, then don't trade. Full stop. And when it comes to like coding and stuff, like yes, we have AI tools. And yes, they really help, but they are not going to help you right now. At least they're not going to help you build a huge, you know, infrastructure thing. But it's all accessible. It's very accessible. And if you're in your spare time trading with no actual understanding of, you know, like even like TA, if you talk to anybody in the institutional world, like professional quants, like guys who are really, you know, and you're like, oh yeah, like I do TA trading, like a lot of them are going to laugh at you because they know they've done the back tests and they've done the statistics, and they're like, you know, it's so difficult. Where like you can take 6 months and you can learn Python. Like you can, inside of 6 months, part-time, you can learn it. And my personal journey with anything in terms of skilling up is when I'm invested in, when I have like a draw or an investment, like a mental, personal, you know,
your focus, like, right?
So something, I want to get something out of whatever I'm learning. I learn so fast. And I think I've seen that with so many people. I've seen that with everything from kids all the way up to 50-year-old men, where they're like, I want to learn, you know, this particular thing, and they learn it like very quickly and very well because
it's the passion, right? The passion of what you learn. And a lot of people look at things like sport, for example, just to really quickly, because we've got about 5 minutes left, and I really want to just dig into what your thoughts are going to 2026. But what you said is absolutely right. For me, if you would look to look, for example, at any major sport, right? Let's just take whatever, golf for an example, right? And you thought, you know what, I want to start playing golf. You wouldn't in that first instance just go and try and qualify for the Masters or the US Open or the British Open or whatever. You would think, do you know what, I probably need to go and hit some balls. I need to learn what this game is about, maybe get some lessons, stuff like that. And you would literally take that application to anything. If you wanted to learn law, medicine, well, you would see that. But in trading, there's this gambler's mentality, right, that draw people to these markets that think they can make money out of nothing, and therefore ultimately do yourself a disservice because you're in the game for a long while, but you're not really educating yourself. So we said this before the show, didn't we? We just end up, both pair of us, just rattling on for ages. But what I'd really love to get for, and I'm sure we can do this again, because I'd love to dive a bit deeper. But I'd love to know a few of your kind of like personal insights at the moment, right? What are you looking for? What are you looking in terms of the close of the year? What are you looking for heading into 2026? You know,
Sure.
What's the thought
Sure.
process?
Yeah, so before we get into that, I just really want to like share the learning how to code is free. It's just time. And it's not a lost opportunity cost. Trading, if you don't make money, is an opportunity cost because your time is valuable. And I've learned that the hard way. The other one is that I really want to quickly mention. Institutions are not gigantic behemoths. I started a high frequency trading prop shop. It was just my friends and my money. And we were technically classified in crypto as an institution. And an institution is just some sort of corporate entity that is trading on. And that was a big lesson for me, was like when we actually had something profitable and we actually realized for tax reasons we got incorporated, we became formally in crypto land an institution. And there's a lot of things that I've learned since that you get as an institution when you approach, say you get to a point you want to go work with a custodian, or you want to work with exchanges like us or Weeks or whatever. There's a lot of like perks that come along with that you can get as an institutional player that is actually very achievable, even with small capital. Like you could, it's just a way of framing it, and it could be done. And I just, that was something for myself that was really I thought was like this big mystical land that I really think that a lot of people, especially now in like the normal independent traders that are that I used to be, that kind of gets lost and is not really translated. So I would definitely recommend, if let's say you're managing like a pretty big book and you're doing really well, I would definitely look into the avenues of either becoming an institution, quote unquote, like so getting a corporation and getting or what have you, or approaching some of these parties being like, hey, I'm a pretty big player and I want to come in as an institutional player. And I think that you'll actually find there's a lot of benefits that come from that. But in terms of like moving into the future, the end of this year, so I mean nobody knows what's going to happen. And I think I think moving forwards, because of my network that I've built myself now over the last few years, I'm seeing personally, like I said before, very similar sentiment and very similar kind of behaviors from new players. Then there, and what the truth is all the other old people like myself, we're all very calm, we're all very chill. And if you look, I mean, Bitcoin pulled back 30%, sure, but SPX also pulled back 5-6%. And in these big moments of volatility, Bitcoin is anywhere from 5 to 7x volatility of the indexes. So to me, I'm going, okay, whatever. And we're still above previous all-time highs. Like we're still up, and we're still huge. So moving forwards, I'm never going to be one to tell you where I think the price is going to go. I'm never going to give you a dollar. But
I mean, do you look, just quickly, Robin, do you look at, so for me, for example, and I have this conversation with people a lot, I'm looking into 2026 and I'm saying, okay, we've got fiscal stimulus in Europe. Germany are already under the program. You've got America that have a humongous debt buyback. You're almost certainly going to see some form of quantitative easing come in. We've got a new Fed chair going in. A lot of people's, Trump, expelling a lot of effort on the Fed to try and get people that are really kind of looking his way, keeping rates low. GDP's been stable. Tariffs seem to be washing through. China's always in the news for one reason or another anyway, typically whether it was flooding the markets back in the day or whether it's about the semiconductors, raw earth. So for me, I kind of look at that and I think, look, correlations aren't always there, right? With the indexes and risks doing good doesn't mean that Bitcoin and crypto has to do good. I think we're very much in a flight to quality environment as well, especially with things like altcoins and projects, right? I think you need to be more selective. But I just think that when you see that kind of landscape, people talk about the AI bubble. You know, if you really study bubbles, this isn't debt funded. It's nothing like previous bubbles. You look at the dot-com bubble where it was like companies had zero earnings, would say zero, and the valuations were hundreds of times, you know, nothing basically, but they were huge. We're nowhere near that now. We're like 32%, 28 to 32% debt funded. CapEx is going big. CapEx projections are still rising in 2026. So, you know, I look at that kind of stuff and I say, look, I don't make price predictions. What I'm always trying to understand is, you know, are my longer term to medium term investments moving into a stage next year that I think we still have, you know, the underlying narrative of bullish conditions? And for me, they're there. Is that the kind of stuff you're looking at as well? Because you're so deep in the you know, the other side of this with your institutional understanding, your operations, what you do at KuCoin.
I would say very simply, Wall Street has punched in, and I mean, now what I see personally, like genuinely, this is my personal opinions, and not of, you know, anybody else. I think now when you look at the big blue chips, it's a battle between, you know, Asia, North America, Europe, like Western versus Eastern players, maybe. But reality is Wall Street's punched in. I've been in some rooms where they're all going, it's still a small piece of the market when you look at overall everything, and they're right.
Yeah.
And I mean, volatility is volatility. And to me, if you look at the historical stuff of Bitcoin, like, I don't, like, at this point now, I don't care about next year, because it's going to go up, it's going to go down, but it's not going to be going, it's not going away. And I, like, what I say to people is like, look, if you want to invest in Bitcoin, like, you can trade Bitcoin, but I think there's a lot, like, volatility is better on other assets. So when you're looking just at Bitcoin, like, what do you think, like, what do you think is going to happen in the next 5-10 years?
Yeah, what's your time horizon, right?
It's going to go. But if you're looking at, like, you know, just next year, I would, like, so personally, I really don't care about, like, anything past 3 months of age. So, and when I'm looking, if I'm intraday trading, which I think a lot of people do, especially maybe in your community, I don't even care about the last month. Like, for me, I'm looking at, like, what is happening today, what happened yesterday, what happened the day before that, and that's all I really care about. And I look a lot at like, there's, like, the quantitative side, which makes things, like we talked about, like, the reason why I don't care is because I know that the systems that I've developed are going to work, because I've done all the work. And I'm not just long, like, you know, it's long and short, so you can, you know, things work both ways. But I really, like, you know, for me, it doesn't really matter that if you're looking at, like, okay, well, what do you think is going to happen in 2026? I just simply say Wall Street punched in. I mean, what else do you want? Like, either they need extra liquidity, but are they really happy with a 2x when they see past performances done, you know, 120% annually, or with, like, you know, drawdowns, or are they going to want more? And what I can tell you is they have very quickly have realized that the value is owning a big stake and not letting go. And when they sell, they open up the risk without hedging. They open up the risk. So their whole purpose now, from what I've seen, is just to accumulate more. And so to me, you know, if they're in, I'm in. So let's go.
I love that. It reminds me of a great Lynn Alden quote, which is just, you're not stopping this train, right? I think that, and it is an understanding your time horizon, which is such an important thing to say there. So just to kind of close up on that point, you know, most of my trading is intraday. My investments are obviously longer term. As I look to 2026, I'm kind of saying to myself, okay, how am I positioning myself here in terms of the risk exposure I want to put onto my portfolio at the moment? A lot of things are relatively cheap to how they should be trading if you're looking at things like PE and stuff like that. So I'm thinking, do you know what? I back that transition to continue into there. For other things like Bitcoin, really, for me, the game is and will remain, how cheap can I adding little bits here and there so that I'm constantly bringing my average down or kind of keeping it stable. And then, like you say, for me, it's a 5-10 year plan. So I'm not going to freak out if 2026 doesn't kind of play out like I would expect it to play out, right? I have my intraday trading for that. I have my long-term investments, but ultimately you have to understand what hat you're wearing, right? And again, no matter what you've talked about, the quant trading, your early stage investment, what I've rattled on about in terms of what I do, I think the key theme here is investing in yourself, your education, understanding your systems, what type of trader, investor, or, you know, entrepreneur you are, even in the space, right? But ultimately trying to strip away the noise and trying to just spend that time that you might be scrolling through Twitter, or you might be doing something a bit benign or distracting, and just say, do you know what, I'm going to do 20 minutes of Python today, or I'm going to expand my horizons, I'm going to take this course, or I'm going to do that. So I think it's been really, really, really insightful for people, Robin, and I really, you know, can't thank you enough for coming on the show. I wish we had like another hour at least to start rattling through these things, but hopefully we get the opportunity to
Google expected value. That's gonna be my one line. If you don't know what your expected value is out of how you're trading, then don't trade.
Yeah, and I think that's a great close. But before we say goodbye, and a big thank you, Robin, how can people get hold of you? How can they follow you?
Yeah, so I'm actually because I used to be an artist, I used to have all this social stuff, and I killed it all because I'm now, you know, I started trading and I went, great, my client's the market, I don't need to market myself anymore. I'm more than happy to chat. You can connect with me on LinkedIn. I do have a Twitter, Rob Z Saunders, Rob Saunders. But yeah, but LinkedIn is probably my go-to. More than happy to chat. Just let me know, you know, that you saw me here, so I know where you're coming in from. Yeah, perfect. And yeah, I'm always happy to give advice. You know, I'm here. So I just, my ethos over the last several years has just been help where you can help, put out good energy, don't be toxic, and eventually the world will bring that back to you in some way. And you don't know when, you don't know how. So if you just push out good, good will eventually come back.
I absolutely love it, mate. Thank you so much for joining us today. Some great wisdom to end on as well there. So people,
thanks for having me.
Please give Rob a follow. All right, you can do that at Rob Z Saunders. That's Robin Saunders. All right, institutional over at KuCoin. Thank you so much, Robin. It's been an absolute pleasure. Have a fantastic
Thank you for having me.
And festive period. Hope to do it again.
Thank you.
Awesome. I mean, that was just, I don't know what to tell you. I really, really enjoyed that. Honestly, we do have some fantastic guests on here, and I know a lot of you will be listening to this. And if you really, something resonated with you, all I can recommend is just act on it. Okay. Listen to the messages that are coming across: education, investing in yourself, understanding the type of trader you are, your time horizons. All of these things will help you in the future. Okay. So do go and give Robin a follow, find out what he's doing over there on the institutional side with KuCoin as well. But apart from that, I have to wrap things up. Just want to say a really, really big thank you for joining us again. Join the Trading Congress. Is completely free. You can get free access to the Discord, early bird Black Friday offers, all of these things galore. Links are all in the description if you're watching this on YouTube. If you're not, please take yourself over to the Burb Nest Twitter profile or X profile. You can find everything there. And if you struggle with any of that, you can reach out to me at BC_Richfield. Okay. Or you can come and find us over at the Burb Nest. Have a fantastic day ahead, everyone. We are going to be live in a couple of minutes with another banger show. So I'll see you there.